If you're buying this to make a profit, then maybe you look at things that way. If you're buying this because you need to protect yourself against the inevitability of what you see coming, of the indebtedness of this country, of the mismanagement of the world reserve currency, of the weaponizing of the dollar, of the weaponizing of what it is that made this country what it is, the Justice Department, the legal system. To me, that's terrifying. And I think these are the reasons why you accumulate gold and silver before it becomes obvious to everyone else.
Are we nearing a pivotal awakening event? Questions Andy Schectman, CEO and president of Miles Franklin. He anticipates potential bank failures and bail-ins before year-end, leading to transformative shifts. Concerned about financial stability, dollar usage, and systemic changes, Andy suggests gold and silver ownership as protection. Recent trends show gold rising due to a slight dollar pullback and lower Treasury yields, stabilizing near $1,900. The weakening U.S. dollar might elevate the silver market. Andy highlights the potential for a shortage of precious metals to capture widespread attention, potentially driving up demand. Economic fears trigger a rush toward gold and silver, causing shortages in coins and bullion products. Moreover, Andy notes the escalating demand for silver from various industries, leading to significant deals with major corporations. The annual report by the Silver Institute reveals that silver demand surpassed supply in both 2021 and 2022. Notably, there's a reported shortage of specific types of silver bars and a discernible reduction in availability on exchanges. The interest in physical silver experienced a notable upsurge, with global sales of silver bars and coins rising by 36% and tripling in India compared to 2020. Just before you watch the Andy Schectman's interview and learn more about market trends, consider subscribing to our channel and give this video a big thumbs up. Andy mentions a bank bail-in because Silicon Valley Bank was bailed out despite having substantial funds. This raised concerns about fairness and risk management. The Basel Committee's TLAC standard requires major global banks to maintain both long-term debt and regulatory capital for increased resilience. This could help to prevent bank failures. Currently, only 8 global systemically important banks in the U.S. comply with TLAC. The Biden administration is proposing to extend this to additional domestic banks over $250 billion in assets.
Whenever I talk about a shortage of supply, Dunnigan, I think of the mainstream jumping in. What would get the mainstream and their attention to precious metals more than anything would be a bank bail-in. Now remember, this is not just hyperbole. In the 2009 Dodd-Frank Act law, it says banks need to be bailed in, not bailed out. That's why there was so much pushback against the Fed and FDIC for bailing out Silicon Valley Bank, which had 10 checking accounts with $14 billion in them for 3 years. You wonder, where was the FDIC then? Where was the risk management of the bank and of the corporations that had $14 billion in a checking account earning no interest, and with a $250,000 FDIC guarantee? Why were they bailed out? Is there something bigger here than meets the eye? Don't know. I mean, there is a fine line between conspiracy and reality. And when you talk about how fast things can change, Keith Neumeyer just came out and said, for the first time ever, he's seeing car manufacturers at these symposiums he's speaking at these conferences, where they're coming in there and going directly to companies like his to disintermediate everything in between and get their silver that they need for industrial applications right there. And when you see solar panel companies and car manufacturers going to economic conventions to talk to guys like Keith Neumeyer, I mean, how fragile of a system, at what point, where are we on this scale where real quick something happens? There are deals already being put into place by guys like Tesla, Elon Musk and Tesla, or Sony, or Apple, or Samsung. Any of these corporations will say, fine, we're going to just take everything that you want to give us. And we already see the drawdowns off of the exchanges. Ted Butler says there's a massive shortage in commercial grade bars, that the majority of the bars that are on the exchanges are not for sale, that the open interest is many times what is available for delivery, that we are really close to that moment. Once it becomes obvious to everyone else, you're done. You're crowded out. The premiums go up. The delivery delays are accentuated. But here's the interesting thing. Yes, we saw an expansion, a much greater expansion into the mainstream over the last several events, whether it be COVID, whether it be the banking problems. We saw an expansion. But by no stretch of the imagination did we see a substantive expansion. Rick Rule still says at the conference I saw him at a few weeks ago that less than 0.5% of the public or of the whole investing complex is invested in precious metals, less than 0.5%, with the mean over the past 40 years being 2.5%. You just get back to a lowly 2.5% allocation because the public wakes up and sees a bank like Truist or US Bank bail in, and bang, people lose millions and millions and millions and millions and millions of dollars, and oh my goodness, this is real. Now you're competing with the entire stadium, right? You're competing with everybody, not just the small orchestra that we've been talking to, or the choir, rather, I should say. And now you're talking to everyone, including the people outside the building who are running as fast as they can to do what they can to protect themselves, which will only exacerbate the demise of the banking system, which will only raise rates, which will only create more chaos. If you don't see how this can snowball out of effect in a matter of minutes, hours, days, you're not really seeing it clearly, in my opinion. And so you don't want to wait to develop your core position. If you do, you're making a monstrous mistake. This time, it just seems different. This time, to what you said at the beginning of this talk, the acceleration of events that have potential really drastic and catastrophic outcomes without trying to sound, without trying to be dramatic. I think there are these types of outcomes.
Andy observes that the influence of the U.S. dollar is waning as more nations opt for their own currencies in significant transactions. In the early 2000s, nearly 75% of global currency reserves were held in dollars. Today, this figure has declined to 59% per the International Monetary Fund, with the trend expected to persist. The dollar's reserve currency status not only bestows economic strength, but also political leverage, as exemplified by its use in measures like freezing a significant portion of Russia's foreign reserves and excluding Russian banks from the SWIFT international payments system following the Ukraine conflict. Andy highlights that in a pivotal gathering, Saudi Arabia, the Shanghai Cooperation Organization, and the Eurasian Economic Union are considering joining the BRICS group. This year's summit holds significant significance as China and Russia aim to bolster their political sway amidst escalating tensions with the U.S. and its allies. China, striving for heightened political leverage amid its rivalry with the U.S., advocates BRICS expansion, while Russia seeks new alliances amidst Western sanctions related to the Ukraine conflict. However, Brazil and India have expressed reservations, fearing increased Chinese influence within the group. Despite the BRICS facing economic challenges, it positions itself as a geopolitical alternative to a U.S.-dominated world order, representing the interests of the global South. Let's get back to the interview.
The trade settlement currency is coming. Will it be announced this week? Maybe, maybe not. There's lots of conflicting information. James said yes, and one of the representatives from South Africa said no. But we know it's going to be issued. We know that they're the countries that are buying copious amounts of commodities, and by all measures, we believe that they will be used, or commodities will be used, to back a new reserve settlement currency. That's what we were told by the Russian finance minister on many occasions. And we've already defined the fact that gold has been revalued or reclassified as a riskless tier 1 asset. Makes very good sense, in other words, to believe that anything that would rise to challenge the dollar or the system would need to be something that would be trusted, where we wouldn't have to rely so much upon those that are issuing the currency rather than what is standing behind it. I think that's for sure. And look, whether there is no earth-shattering announcement this week, the dollar's dominance is being weakened by the day, and you can see it, you can feel it. Even just last week, India did a major oil deal from Abu Dhabi and paid in Indian rupee instead of US dollars. And for many years, that would not have been acceptable. That would have been met immediately with all sorts of backlash by the West. But this is just more of the same thing. We saw France do the same thing with the United Arab Emirates. Liquid natural gas deal paid in yuan. And We see Brazil doing the same thing in selling their corn and their commodities to China for yuan. And so we are witnessing a continued de-dollarization. And as I've said since that conference, done again and in all the podcasts I've done subsequently, to me, what is really relevant in this meeting, because I do believe that a commodity-backed currency is inevitable. I truly do. There are two things that are really very important about this meeting. Knock it off. The first one would be that we see Saudi Arabia be admitted as a full member of the BRICS nations. And we already know that they've applied to the Shanghai Cooperation Organization and to the BRICS New Development Bank. The Shanghai Cooperation Organization would be number two to this puzzle. In fact, let's give it three big events. One, Saudi Arabia. Two, the Shanghai Cooperation Organization being admitted to the BRICS as well. Every one of their delegates, which is, of course, the largest regional financial and military organization in the world, have been invited to the BRICS meeting in Johannesburg. They are there, and they are suspected to be admitted as members of the BRICS Union as well, along with the Eurasian Economic Union. And these are all the countries that are, I guess you could say, in between Russia and China, those that end in stan, like Kazakhstan and Kyrgyzstan and even Pakistan, all these countries that are in the Eurasian Economic Union that are also rumored to be joining the BRICS nations. You are building this very formidable alliance of countries. And if we come away from this meeting with Saudi Arabia being announced and the Eurasian Economic Union and the Shanghai Cooperation Organization also joining forces with BRICS, you're dealing with critical mass. You're dealing with an expansion of credibility, of military might, of GDP, a growing creditworthiness is what the BRICS settlement currency will be. It will be one that is tied to commodities to give it veracity, to give it trustworthiness, to give it credibility, to give it immutability. These are the things that will be needed, of course, on the rails of a distributed ledger or on a blockchain technology to show the veracity, to show the world the immutability, to give it transparency. These are the things that will be needed to make this new system credible.
In a world poised for transformation, Schectman's insights offer a glimpse into the complexities and opportunities that lie ahead. Do you think Andy Schectman is right to be concerned about potential bank failures and bail-ins before year-end? What are the implications of this for investors and businesses? Let us know your thoughts in the comments. If you liked the video, please subscribe to our channel, and currently 93% of viewers haven't subscribed yet. Help us reach 3,000 subscribers.